Good morning. Happy Friday the 21st of August. I'm Jessica Amir, a market analyst with Bell Direct. Well, a soft lift of 0.2% is expected today for the Aussie market, meaning the ASX 200 could end slightly higher this week, as currently we're tracking 0.1% lower Monday to Thursday. Overnight in the US, we saw dreary economic news come through, with US weekly unemployment claims soaring back above 1 million, far more than expected. Despite that, we saw US stocks bounce back from their prior day's fall, with investors focused on maximising returns amid the record low interest rate environment, while FOMO also played a part too. The Dow snapped its three-day losing streak, rising 0.1%. The broader S&P 500 up 0.3%. While the show-stopping Nasdaq jumped 1%, hitting a brand new record close of 11,265 points, thanks to Apple, Facebook, Netflix, Alphabet and Microsoft shares all rising at least 2%. Tesla shares also revved up over or about 7%, closing above $2,000 for the first time in history. Elsewhere, investors bought into gold, pushing it up by $6 to $1,939 an ounce as weekly jobs claims rose. Now, those fears flew to other commodity markets, which is why we saw the oil price fall for the second session, losing about 1% to $42.58 a barrel. What to watch today? Well, for companies that are reporting or who have reported so far, Alumina, BWX, Mayne, Pharma, which is MYX, Suncorp, Healius, HLS, Inghams, ING and Redbubble all report and have reported today. BWX, their results so far, the most notable as the beauty business reported a 60% lift in profit, with strong growth expected to continue in FY21. In terms of economic news, we'll get a preview of manufacturing and services numbers for August from CommBank, with both gauges expected to have eased as the second most populated state, Victoria, remains in hard lockdown. And this evening in the US, it looks like the US market will lift again, as the US futures for the three major indices are all pointing to positive gains. Now, as for a couple of trading ideas, well, UBS reiterated Tassal, TGR, Origin Energy, ORG, and Pro Medicus PME, all as buys following their results being handed down yesterday. Staying on Pro Medicus PME, Bell Potter upgraded PME from a hold to a buy, with a target of 28.50. Yesterday, PME fell about 2.5% to 24.68 after delivering weaker than expected profit. However, going forward, strong revenues and earnings are expected this financial year, as there's no other competitors in the medical streaming technology space, and the company PME is also continuing to invest about $7 to $8 million per year in R&D to maintain their tech advantage. Secondly, Perpetual delivered a 20% drop in profit yesterday. That was in line with market expectations. On the negative front, though, Perpetual didn't flesh out details about the US fund manager acquisition, and cost guidance was not clear. However, on the positives, Perpetual is expanding its high net worth or private client business, and Bell Potter downgraded PPT's price target to $43.80, but it maintained Perpetual as a buy recommendation. And a stock to think about is the ASX, showing that it's formed a technical bullish uptrend, what's known as an upside break. Now, this is according to Trading Central's charting. This bullish signal indicates that it may rise, extending yesterday's lift of 2.7% to 89.91. Over the next 55 days, it's expected that its shares could grow to 95 to 96.25, and that's according to standard technical analysis principles. But what is important to note, though, earnings are expected to slightly rise in its cash equity trading business, but overall earnings for the ASX are expected to fall next year and then recover the following 2 years. I suspect that this is why the ASX is a UBS sell with a 75 target, but it was reiterated as a Citi sell as well overnight. I'm Jessica Amir with Bell Direct. Happy trading. Please stay safe.